Hello, folks. Brandon Chapman with you today for today's video for Monday, July 10th, 2023. The markets today basically unched on the session. It looks like ES is kind of surging a little bit, up 0.25% as we enter the close. Nasdaq 100, the kind of the focus of our session. We're looking at NQ, basically unched on the session as the special rebalance looms on July 24th. Forcing monsters of tech lower, namely your Apples, your Microsofts, NVDA, etc. We're going to take a look at the impact on the news that came out over the weekend on the rebalance. As today is the first day to kind of acknowledge that. Of course, we're still 2 weeks away before that rebalance happens, and we're going to get some more information later this week regarding the details of the rebalancing. But it is impactful, right? The fact that, look, I mean, Apple, Microsoft, et al., those 7 names have an outsized 55% weighting on the Nasdaq 100, and that is going to be materially reduced, maybe to around 38.5%. Looked like Investor Biz Daily had kind of a value or a number assigned to that. So we're going to take a look at that. We're going to look at some other names that are moving today. They're having unusual option activity like Core Mining and LYFT. But anyway, so let's look at the sector performance. Industrials today kind of leading the way. This is for the S&P 500 index ETFs. And again, XLI is up about 1.4%. And this is kind of interesting. You saw this a little over a week ago. So not last week, but the week before. Industrials was one of the best performing areas of the market. And there were some specific industries, electrical products, auto parts, building products, industrial machinery, metal fabrication. And I was going through a number of stocks that are kind of in that space. And one of the areas we did settle on was 3D printing, like, for example, 3D Systems. And they had a pullback today, a nice breakout. Maybe have a chance to stretch those upper reaches. So we'll see whether or not today's movement is a little bit of an aberration, or again, are we starting to see a trend? And this really kind of begs the question. I mean, we have inflation data coming up this week. We have CPI and PPI. And this creates kind of an interesting environment, a risky environment. We see the expectation 0.3% month over month increase for CPI in the headline, 3.1% year over year on the headline. Strip out food and energy, we're talking about 0.3%. Do we materially deviate from those numbers? You'll notice up here, consumer credit, 7.2 billion versus expectation of 21.1 billion. Inventories did not decrease as much, which means that there's not, we may not have as much desire to build inventories if we're not liquidating. So we'll see how things play out. But ultimately, the inflation story is going to be big. Beige book. Again, we're going to get a sense of what's being reported to Fed. We got Kashkari out there, the Uber dove. What happens when doves cry? That's what we're going to see tomorrow with Kashkari when he starts to talk. But again, we got a number of big reports this week, in particular, again, inflation data. While CPI and PPI, these aren't specific metrics that the Fed focuses on or feels is the best reflection for inflation. They do occur before personal consumption expenditures. And so therefore, they do have an outsized impact. And so anything we're seeing today could materially change tomorrow as the outlook for inflation begins to change and we start to reprice what the expectations are from the Fed. As we look at the 10-year Treasury note yields, we hit about 4%. We're backing off of that today, but we had a pretty nice breakout last week. One thing that's interesting is we look at, for example, 3-month T-bills minus TNX. So 3-month T-bills are higher, have a higher yield than 10-year Treasuries. And notice how the last month we've been kind of flattish. Last week, we saw the difference between the 3-month T-bill and the 10-year Treasury get closer together from 1.75% to 1.2%. And this is interesting because we're seeing as a bull flattening, meaning that the curve is getting flatter, less inverted. The 10-year is moving closer to the 3-month T-bill. Fed is expected to raise rates in another week and a half. But again, this is a bull flattening. There's so much liquidity sloshing around. The Fed's balance sheet over $8 trillion. They still got all their various promotions or facilities, the reverse repo, et cetera, that's providing daily liquidity. So we have this kind of juxtaposition of saying we're concerned about inflation, we're raising rates in response to it, And yet at the same time, we're providing ample liquidity on the back end, and it's having a disproportionate impact on families and individuals and small companies, as opposed to large companies that seemingly have unlimited access to credit to be able to buy back their own stock, a la one of the companies we're talking about today, which of course is Apple. So again, this is we're kind of talking out of our both sides of their mouth in terms of the Federal Reserve. Now, again, these companies, these 7 names, right? They have had an outsized impact on the Nasdaq 100. And this is going to change. You'll see them over here, right? The 2 Googles, we got Amazon, we got Tesla, Microsoft, Apple. Again, these are right at the top of the list of what's moving today negatively, right? NVDA is in there as well. And so again, this rebalancing could have an impact. So let's take a quick peek at the news or the story that was released on Friday after the market closed. And so they're going to say a special rebalance. Normally it's once a year. In this case, we're doing it on July 24th, 2023. Now, again, we've got includes the largest Nasdaq domestic and international non-financial companies. And you'll see that is on July, where is it? July 14. We're going to get the pro forma file release on July 14th. But we're seeing what's happening today, right? So there's different ways to reflect it. You can see over here, Nasdaq 100, what's losing and what's winning on the upside. But if we go to the Market Watch tab here, we're going to go to Visualize Index Watch Nasdaq 100. You'll see that virtually everything is up that would generally benefit if their weighting is increased, and stuff like, for example, Amazon, the 2 Googles, Melly's probably not one we'd really concern ourselves. Microsoft, Tesla, all the names that are up. And again, you'll see 13 versus 83. 7 of those names there are the ones that are probably going to be the most. The weighting is going to be reduced the most. So therefore, they'd be sold today in anticipation of the other stuff's going to be bought. Now, what's up today? Now, again, we flip this around over here and we see, okay, well, Zotis, right? Or Zscaler rather. Zscaler, nice breakout today, 7.75%. This is in cloud computing, right? So we got Zotis in here, Fortinet up 4%, big breakout. CrowdStrike's in the mix there as well. So a lot of these cloud companies, we go, where you look here, try to find a different one. Another one there. But again, we're seeing cloud today getting bid. We're seeing some component companies like Avago or Broadcom, rather, a nice move today. So we definitely see, again, the pros and the cons of the rebalancing. But ultimately, what does it mean for the Nasdaq? And really, at the end of the day, just look at the Qs and you see 0.3%. So in effect, we saw the stuff that should be bid was bid, and the stuff that should be sold was sold. And the impact, the Nasdaq went nowhere, right? So again, all of this hubbub regarding rebalancing, and the net effect is 0 for the Nasdaq 100. And again, you can see some companies kind of breaking out here and some that are not. Some of the areas that are doing well today are companies like Marriott, another one, MGM Grand. So again, the travel side of things experiencing some big moves here today. But you'll also, as you look at this list on the rebalancing, stuff like Starbucks up 3%. Starbucks today experiencing some bullish call activity. So we go to the trade tab here. We look at the 14 July. You'll see 12,000 contracts at the 100 strike. Now, this isn't exactly out of the money. We're talking $1 out of the money, but it is significant, mostly bought at the 100 strike. So again, we look at this kind of resistance area. If we take this out, the expectation, and I drew this for my earlier session, the price was a little bit lower down here at around 98.50. So I'll kind of draw a line here. But the idea was, look, I mean, we may have a near-term move to the resistance at about 102.79. And looking at it from a near-term perspective, remember, we're not really focused on the fundamentals here. We're looking at a near-term bounce off of support. And when you look at the implied volatility 11 days out, notice the lower strike prices on the call side have lower implied volatility. The upper strike prices have higher volatility. This creates a what? A positive kind of skew, and meaning that we might see an outsized move to the upside. And this does allow you to create an upside call spread. Could you buy the 100 and sell the 102? Yes, it's going to cost you maybe about 60 cents on a $2 wide spread, $1.40 of upside, and we're looking at 102 being that upper boundary. If we can break through that, maybe time to close, maybe for less than max gain. But guess what? 11 days left. That should expand pretty quickly if we see a continued bid under SBUX. So not only see the positive impact of the rebalancing, we also see today call activity for this week, expecting SBUX to maybe be a leader this week in its movement. And again, you'll see other stuff in here. Rivian is one we talked about last week in my video. Again, an area of bullish option activity. And this one ended up going from about, 1660, and we're now at 25. I'm not suggesting that that's what's going to happen with SBUX, where the expectations are much lower, but there are some high short interest names out there that could experience some big moves. But this is one we talked about last week was Rivian, Fisker, FSR, and Tesla. Fisker having a big day today, talking about a short squeeze. Again, this is what a short squeeze begins to look like, right? 17% in one day in Fisker. And so again, we're looking at this week and today's option activity, hopefully giving us somewhat of an indication of what may lead out. And one of those names, of course, is SBUX. And again, not quite as exciting as last week's where we had significant option activity, like for example, in Mara that had made some nice movement, Riot as well, that made some extraordinary movement. We're touching that 261% projection. And again, these were all trades I discussed last Monday that are moving relatively big. And if you've been in my sessions, we've been following these names since the support down here coming off our lows. And of course, what's Bitcoin doing? Is Bitcoin helping to drive this? A little bit. Bitcoin made a 2.6% move, but it's virtually done nothing over the last 2 weeks. This has more to do with short covering and a short squeeze. And this has helped this feedback loop between a gamma squeeze in the option market, shorts covering, creating a short squeeze. This is very pronounced in these companies like Riot and Mara, Fisker, Rivian. I think the other one we talked about was Nikola as well. It's not pronounced in Tesla. Nikola hasn't exactly done a lot. But again, wait around, right? FSR today, finally getting that bigger breakout short squeeze today occurring. When did that occur today? I forgot to take a look. Really occurring around 11 o'clock. This is about 3 hours before the market close, really begin to surge. And that's the unpredictability of it, right? So while, again, SBUX is a different company, it doesn't have the same setup as last week in my video, but it does have the unusual option activity. It has that oversold status. It is a leader today, one of the leaders in the Nasdaq 100. And again, providing some limited upside. But again, that out of the money call spread still provides very, very high reward to risk, albeit a little bit lower probability since you've got to go to 102. It's got to go up $3. Okay. So the reward potential could be just the same. You just, don't need the stock to move as much. All right. So let's take a look at another one here. And we're talking about, I just mentioned Bitcoin. Well, what's happening with gold? Gold today was basically flat on the session, was up a little bit last Friday. Ultimately, it's been going sideways for the last couple of weeks. The dollar strengthening, and we look at UUP, this is the dollar index. The dollar's weakening the last 2 days, predominantly against the euro/US dollar. So notice how the US dollar broke out on Friday. We're continuing higher today. It's not exactly moving the needle on gold. Now, tomorrow's CPI data could change things quite dramatically. If inflation comes out hotter than expected, all of a sudden the Fed has to raise rates more potentially. The expectation would be, and the dollar may strengthen, especially against the euro. Right now, we're seeing weakness in the dollar against the euro, and we're seeing basically the dollar's gone nowhere for the last couple of weeks, using the gold as the anti-dollar. And so as we watch it right now, the inflation data this week could create a stir in movement in gold, especially if inflation comes out under expectations, less than 3% or 0.3% month over month on the headline, for example. And what that means is the Fed may not raise rates as much, right? They might be able to get back to accommodation quicker. Near term, this could create weakness in the dollar and strength in gold. And that kind of brings us back to core mining, CDE today. Now, this is out there ways. It was up 6% today. It's at a support level. It's tested many times and frequently has seen some big moves, 260 to 320, 260 to 4 or 440. So what we're looking at in core mining here, and we're looking at the option activity in core mining for a Jan 2024, 5,000 contracts mostly bought at the $3 call option. And you notice out here, volatility is rising, right? This is oftentimes what happens with gold or commodities. The skew is more to the upside. But you could go shorter amounts of time, like in August, for example. The liquidity is not as great in these times. But again, notice the volatility. Could you buy a 3 and sell a 4? Well, you need it to get to 4 in the next what? In the next 39 days. Is it likely? No. Is it possible? Well, look at what's happened in the past sometimes when we get these setups where we could have a big, big move. And notice I might cost you probably just buy the call for 20 cents and let it ride, because there's nothing out here in terms of premium to really sell unless you go out here towards Jan. This is going to take a lot of movement to expand, but again, cost you 25 cents on a $1 wide spread, and you got plenty of depth there. So the point is that there's opportunity to take some upside swings right now in gold and gold mining stocks like core mining. You could look at other ones, but this is one that had some significant call option activity, albeit for a January expiration where there's not going to be much gamma squeeze potential, but it is an indication of money flow into it. Also today, LYFT. Now, LYFT is a high short interest stock. It is breaking out of kind of a pennant or a flag pattern. We had a nice little flag here, flag pull, straight line move, decent volume, consolidation, breakout on significant volume. And we're looking at near term that's going to maybe 1250 to 13, secondarily up to around 16, basically closing the gap over the next weeks to months to get you to that point up here. The option activity in LYFT was pretty broad in this 14 July expiration. The 11th was the 11th strike was the most robust at 7,100, almost 7,200, mostly bought early on at the $11 strike price. Again, we're trading at $11, but we have some other stuff trading at 12 and higher. Again, the expectation is we do break out, right? So if we do break out, we closed above the prior high, or if we do close above the prior high, trade through it tomorrow, this could create an opportunity again, 13, maybe shooting for 16. The high short interest and the hedges placed on that does create, again, a rising vol structure, right? Positive skew. And this even persists out to an August expiration. So if you are shooting for the outer edges of 15 and 16, again, what could you construct out here? Well, again, you could basically construct whatever you want, starting with the 11 all the way out, depending on how high you want to go. Could you do a 12 and 13? Yeah, it might cost you about 24 cents. Could you do a 12 and 14? Yes, it might cost you about 40 cents. So the point is there's a very strong reward to risk shooting for the upside. And again, this would be kind of expecting some sort of short squeeze, maybe some of the bullishness surrounding Uber translating towards and shifting towards maybe expectations that LYFT might be a little bit undervalued as it heads into its earnings. So again, do we see the short squeeze, the buying in expectation that the earnings will be better than expected? That's kind of where we're playing here. And you've got the unusual option activity coming in, helping to spur or create that potential squeeze in the price of a company like LYFT. Well, folks, we're out of time there. Again, bank earnings starting this week. We got inflation data, a lot of stuff coming up next week. Of course, we got the Fed statement as well. So a lot of stuff that could move the markets as we hit the end of summer. And it's been a pleasure being with you today. Have a great one. Thank you.